If the SEC approves all spot XRP ETFs by October, the path to $50 by December 25 isn't hopium, it's math plus market structure. Read this before everyone else catches on. Oh, filings are real, live, and stacking. We're not talking rumors. At least 6-7 major issuers have active S1 South or amendments in front of the SEC Bitwise, 21 shares, WisdomTree, CoinShares, Canary Capital, and Franklin Templeton, which filed a dedicated Franklin XRP ETF S1. A cluster of amended S1 South hit after the Ripple SEC dismissal, signaling go time positioning. 2. Decision calendar equals October window. The SEC has pushed decisions like WisdomTree's XRP ETF to late October 2025, with other issuers in the same review cohort, i.e., a synchronized green, red light moment. If approvals land in that October window, queue for launch is in play. 3. Reg framework tailwind. The SEC has begun publishing crypto ETF guidance, and exchanges are pushing generic listing standards for crypto ETFs, shortening timelines and normalizing approvals beyond BTC, ETH. That's the policy backdrop you want heading into October. For the first month flow base case, $5 billion plus. Independent market desks peg first month spot XRP ETF inflows at $5 billion before the reflexive chase. That's a serious demand shock to a supply that's partly escrow locked and concentrated. 5 per institutional on-ramps already built. CME launched XRP futures May 25 and Coinbase derivatives listed CFTC-regulated XRP futures April 25, the same runway BTC, ETH had pre-ETF. This matters. Futures, liquidity plus spot ETF is the standard playbook. 6 per supply mechanics favor violent repricing. 3536B XRP remain in escrow under pre-programmed releases. Much of circulating supply sits with large holders, exchanges. Translation: effective free float is thin relative to potential ETF demand. Thin flow plus billions in net buys equals air pocket up moves. 7 scenario math illustrative, not advice. Assume $5 8B net spot ETF inflows by late November multiple issuers. At basis, futures are plus REA rebalancing plus corporate treasuries, another $5 1 OB potential by year-end. Against a circulating base approximately 590 XRPCMC, with meaningful portions illiquid, the price elasticity required to clear $10 18B of net demand can be extreme, historically producing multi-X moves in assets with deeper flows than XRP. 8. $50 is plausible in Q4. ETFs convert sidelined mandates, RIAs, wealth platforms, pensions into rule-compliant, daily settled spot demand. With October approvals, 2 months of compounding flows plus year-end window dressing plus FOMO can push XRP into a reflexive regime. Note: BlackRock sitting out doesn't block price. 6 plus other issuers is sufficient. 9. The kicker: infrastructure narrative. This isn't just exposure. It coincides with XRP's institutionalization arc, CME futures, derivatives liquidity, and a post-litigation market that finally treats XRP as a settlement asset, not a sideshow. ETFs are the distribution layer for that thesis. 10 per bottom line: if all spot XRP ETFs clear in October, the queue for liquidity flywheel inflows gives higher price, gives larger own, gives more inflows can ignite. In that setup, $50 by December 25 stops being a meme and becomes a path, not a promise.